We live? Looks like we are live. Welcome back to Dipcatcher Radio. Took last week off. Coming back at you, weekly live stream talking about what's going on in the crypto space. Looks like we're live. Link's been sent out. Yeah, so today's going to be a quick little stream. Don't have much time tonight, but perfect in time with this recent HEX price pump that's been going on. We've been covering HEX for the duration of our live streams, and people have had some pretty good success already. But what's really cool about right now is that this current price pump, it's leading up to a couple different forces at play in the HEX economy. One being the end of the launch phase. HEX has been around for almost a year. It rolled out through a year-long launch that we discussed in one of our videos. And it's coming to an end here in about 27 days. And so we're just on today's stream, I wanted to take a look back at some of the analysis that we had done, trying to predict what this end of the launch phase is going to look like. And then also take a look at the price chart and kind of see where we think it's going to go from here. So yeah, just look at the chart. It's, we zoom out to the daily chart. HEX has really been in, if we go to the chart that shows the all-time performance of HEX, HEX has actually been in a pretty long bear market. We had this crazy price run from almost zero up, thousands of percent measured in Ethereum, and then pretty much all summer while the rest of DeFi was pumping, HEX really led the way and kind of created DeFi. But while the rest of the DeFi space was, having their day, HEX was definitely retreating. But over the summer, towards the end of August, HEX really found its bottom. And since these dips down here, which in our Telegram channel, people were buying. We even released a video on September 8th, giving an instructional on how to buy HEX. Colleen had made this awesome video. You can find it in our channel. But from the launch of our video that we had a couple weeks ago, HEX is up 150%. So for the couple dozen people that watched through the video and with the help of Colleen, help get into HEX, they're seeing some awesome performance. So that's been really cool to see. But what's really kind of, there are a couple forces at play here. We've got just the general push exhaustion cycle, where the market, it's just price discovery. It's just where the market is trying to determine how much this thing is worth. So, where price will follow a trend, and then as soon as that trend runs out of energy, it'll kind of retreat. And so on a couple different time scales, you can kind of see that where, HEX really, from the start had this massive push to the upside. And then usually when things go up so massively, from the bottom up to the very top, measured in Ethereum, measured in dollars, it's an even greater percentage, but measured in Ethereum, HEX went up 6,500%. And that's just massive. And usually when things move that fast in just a matter of weeks, that can't sustain. And so, the market just needs to retrace. And so after, those peaks, we sat through our first 80%, bear market. And that's something that you see in the Bitcoin price, went from 20K to 4K. And so an 80% retrace in crypto is really nothing. People might complain that it's too volatile, but those 80% retraces, that's what gives energy for these, 150%, 200% moves to the upside from the bottom of that retrace. And that's really the dip that you want to be in there catching. When people are selling because they think the project's dead when it's down 80%, if it's a legitimate thing, you want to be scooping up that dip, because once all those people who think it's, it's overpriced, sell all their HEX, they have no more to sell, and then the price, can only go up. And so that's kind of what we're seeing unfold right here, is that, all the sellers just ran out of energy, and then buyers re-entered the market. So just aside from the events that are happening over the next couple weeks, the HEX price is just following basic market cycles. And so, that'll only continue. The more money that is traded on here, that it'll continue to operate in this way. But the main thing that we're really going to be looking out for over the next couple weeks is it's going to be it's called the end of the launch phase. So the way that HEX launched is it went through 351 days of these daily auctions, where every day about 512, 511, about 510 million HEX were minted and issued through this auction process. And so right now that accounts for a pretty large amount of the daily inflation. Because in HEX, the current inflation sources come from this, the launch phase, plus just like the normal system inflation, where it's annualized 3.69%. And so the daily payout, paid to stakers, of the inflation right now is 48 million. And at the same time, every day there's 510 million HEX also entering the supply. And so the HEX that is issued through this auction, that will come to an end in about 27 days. So just like right off the bat, the daily inflation rate is going to cut from, let's see, where can we find these figures? Okay, if we just go to hex.live, we can take a look at this. So this is hex.live. It shows the supply and how much it's changed. So right now, like the total supply every day is increasing by 0.3%. So that's really high. Like if you were to calculate that over 365 days, that's 109% at this current rate, which it's gone from 0 to the initial supply. So there's going to be high inflation. But as soon as that ends, the only form of inflation is it's going to ratchet down a little bit. So kind of like in Bitcoin, every 4 years there's a halvening where the inflation rate cuts in half. A similar thing, but it's not really happening because, as you can see, the 500 HEX is minted per day through the auction, and another 50 HEX or 50 million HEX is issued right there, through the daily inflation, just like the normal staker pay. And so when this cuts out, the daily inflation is going to cut down by like 90%. It's going to go from about, say it's 550 million, and now it's going to be 50 million. It's going to cut down like 11 times. So 1 over 11, that it's going to be down like 10% of what it is. And so that's really what I think is leading to this really big price push that's going on, that we're literally watching in real time. Seeing this thing pump, is that one, like all the sellers, like they've just been exhausted of selling over the last like 5 months, all the way back till May. And then at the same time, people are preparing, the market is preparing for this drastic cut in the daily inflation. So this is what we made this graphic on one of our old videos. You should go back and watch it, where we talked about really deeply in detail what all this means. But that's what we're getting ready to do. Here in about 27 days, the daily inflation right here is going to cut down, and so it's not going to go down to the true, like the target inflation rate of HEX, which is 3.69%. It's not over the next 15 years. This is the second part that we're gonna get into. It's not truly, it's not truly at the 3.69%. There's the payouts that are made as like the crescendo step of this launch phase. It's called Big Payday. Big Payday is just like the marketing name for just the event where all of the coins that were available for Bitcoin holders to claim for free that didn't are then issued to all of the stakers. So on this day, it's a massive transfer of money from people who are not staked to people who are staked. So on that day, the last day of the auction, or of these launch auctions, the last day of the launch phase, um, when you're staked, you're going to get a portion of these unclaimed coins, and so that comes from the. Let's see where we can find it. Um, yeah, right here. So only about 2.73% of all the available um, HEX that could have been claimed actually was claimed. So all the remaining coins that weren't claimed for free, which if you had Bitcoin on the snapshot date a year ago, you could claim. All those coins are going to be issued to the stakers. And so as long as you have a stake. And the more shares you have that you get from longer stakes, the more of this pool that you're going to get. And so during this time where, between day 351 and then day 5,907, so 5,555 days after this day, there's going to be these like little spikes in this inflation curve, because this is like the distribution of all the shares, and the shares represent how much of that like one-time unclaimed coin payout that each address gets. And so like days where there's like a lot of stakes expiring, you're going to see a lot of new supply on those days. So the inflation curve is going to kind of have these like this type of shape to it, where like people from like the first day, a lot of people were doing like 1 year, 2 year, 3 year, 4 year, 5 year, 6 year, 7 year, 8 year, 9 year, 10, like that type of sequence. And so you see these things, so like the big one is it like the 10-year stake. That's a really popular one. And then there's like also these 15-year stakes. So this is what the inflation is going to be looking like. And so that's another reason why people might be buying, FOMOing into HEX, is because they want to buy a lot of HEX so that they can enter in a long-term stake. Because like say you have 1 million HEX, 1, 2, 3, 1, 2, 3. If you stake that for 5 days, you earn just a little bit of interest. If you stake it for 55 days, you're going to earn more because you get longer pays better, and you'll get some of the big payday. Longer, you keep getting more, and then even longer, like you're earning interest as if you're starting with 3 million HEX. So like you can extend, like you can amplify the power of your HEX like up to 3x just by staking for longer. And then on top of that, you get like a large portion of this like big payday HEX. So if you start with 1 million HEX leading up to big payday, and you stake for 5,555 days, your HEX is going to be earning interest at a rate equivalent to if you had just started with 3 million HEX. And then also you're going to be getting a portion of that like unclaimed coin payout. And so in the end, you're going to end up with, depending on what this number is, the more people that stake, the lower this number is going to go. But if you're getting a portion of this, this payout, like, just if today it ended, if today was the last day of this launch phase, you would go from having 1 million HEX to having 5 million, almost 6 million HEX, just right off the bat. And then that doesn't even count the interest that you're going to earn, where on the last couple days of your 15-year stake, you're going to be earning a massive, massive proportion of the inflation pool. It has this compound interest effect that has to do with like this share rate, which we'll have to do a whole video. We talk about the share rate in some of the other videos, but we'll have to do a long video about it. The share rate is what determines how much interest you earn, and it creates a scenario where, like, towards the end of a max length stake, because your stakes have been going on for so long, and your share price that you got those shares for is so much lower than everyone else whose stake is also expiring that day. Per hex, your stake is accumulating so much more interest than people who maybe started like a 100-day stake that expire on that same day. So all those days leading up to the end of your stake, you're going to be pulling in massive amounts of interest. Like it'll become clear what that percent is closer to the end of your stake. There's no way to predict it because it all depends what everyone does after you. But there's that's really the benefit of doing these like really long-term stakes. It's just those those last 2 years of your stake. It could be like earning you over. I don't know how much it would. There's no way to know until it's happening. But it could be earning you like even more than your principal per day. There's real opportunity for that. And so just combination of people trying to lock in these long-term stakes because they want to get part of this big payday, and then also people who are like the third force that's really pushing people in that has something to do with kind of both the things I just described, is that people are trying to be like, because HEX has this compound interest effect, it gets put into like the way it happens is through that share rate, and the share rate that the HEX stakers pay in order to turn HEX into a stake, that is based on it calculates what the maximum stake return on investment was, and then sets the share rate equal to what that ROI would be. And it's kind of hard to write. You have to really like look at the math to fully like unpack that. But all it really does is it makes sure that a single 1-year stake, a single 12-month stake, is going to earn more interest than a series of consecutive 1-month stakes. It ensures that mathematically it's impossible for a series of short stakes to earn more interest than a single stake that encapsulates that whole entire period of time. So it's just like a way to one, like ensure that there's compound interest, to reward long-term holders, long-term stakers, and also to make sure that you incentivize people to do one single stake instead of doing a bunch of small stakes. Because if you could just do a bunch of small stakes, then it defeats the whole purpose of staking at all. And so, people are, just loading up, their HEX so that they can enter a stake, because the way that the share price is calculated, after the big payday, after that launch phase is done and the unclaimed coins are paid out, the share price is going to take a stepwise move up. And so, like every day, the share price, I think we can look at it on hex.vision. Let's take a look. Every day, like the share price goes up, and that's just all it means. It's misleading to think about price only going up, but it's not a price that's set by the market. It's an exchange ratio that is set by the protocol, and so it's not like necessarily a price. It's an exchange rate, but it's not a price that's like set by the market. It's like just like a parameter in the equation that calculates what the interest payment that you're going to earn is every day throughout your stake. And so let's see if where we can find the share rate. Probably under staking. Maybe in hexinfo.io. The site's still up. Where can we find the? I wish someone. Where? Okay, so I know that it's in the block data. Is it? or is it going to be in stake? Let's see. Let's try to find the share rate. Okay. Another place we can kind of look at the curve of this equation is this. On go.hex.com, they have this thing that shows the daily payout per Terra share, so per trillion shares. So like right now, if you were to open up a million hex stake for 1 year, for instance, you would get 108 million or 108 trillion shares. So when we go back to here and we look at 108, so 108 T shares, and so this curve right here that shows how much these trillion shares get paid, like the daily payout per Terra share. This constant slope, you can ignore these ones. We can talk more about that later, but this constant slope is a reflection of that share rate always increasing to one, to meet the constant 3.69% inflation rate, and then two, to ensure that a single 12-month stake is going to earn more than 12 one-month stakes. And so, like your 108 Terra shares, over a year. So let's take a look at this. Like, let's try to estimate the slope of this line. So let's say from day 200 to day 300, it went from about, let's see, where's that at on that day? Just under 3 to just over 4. So let's say that's 3.1. Let's say it's pi, not pi. It's not gonna be pi. So let's say that's just 1.2. So it's increasing at 1.2 hex per 100 days. So over this 365-day period, let's see, let's cut that in half. So 365 over 2, so 182. So in 182 days, or on the 182nd day, that's going to be at like what your average price is, or daily payout per Terra share. So if that increases at like 1 per 100 days, and so that's almost 2. So, and right now it's at about under 5. So the average daily payout per Terra share for the duration of your stake is going to be somewhere in between 6 and 7. Let's say 6.5. So you're going to earn 6.5. 6.5 hex times the shares times the duration of your stake. And so that's kind of how you can think about this like share rate, is that like when you go onto the go.hex.com to enter in your stake, it'll tell you how many shares you're going to get. And then you can look at the slope of the line, and you can estimate, roughly how much you're going to earn over the duration of your stake. And so like a single 365-day stake is going to only get you 108. But if you multiply that by 10, you're getting 272 Terra shares. And that's paid out over the duration of your stake. And so that share rate is, we'll have to do a whole video on that, but that's also a thing that people are looking to lock in, is because of the way that the share rate is calculated, it's going to step up dramatically. And so stakes that are starting during the first year, like if you were to open up a stake 2 days before the 2 days before the like that big payday event, the end of the launch phase, you're going to earn way less than if you open up a stake 2 days after that day for the same amount of time. And so there's kind of a rush to get in, during this time where the price is still being suppressed by the 500 million hex that are entering the supply as part of the launch. like these launch auctions, combined with people trying to get in before there's a massive supply shock, where that daily inflation's cutting down, um, you know, synced up with when people are trying to get in to get a part of this big payday, getting a part of the unclaimed coins. And so what that's doing is, as people are doing, the only way to get this is by staking. And so leading up, I think we're probably starting to see the stake rate increase, like the percent of all coins that are staked. So this is going to be, that's like the whole point of the staking, is that it provides price support. It helps push the price up. And so when all these people are going to be staking their HEX in order to get a portion of the unclaimed coins, that's going to be removing coins that could otherwise push the price down, and that's going to potentially help drive the price up. So people are buying in preparation for that. And then just on top of that, like I think what we talked about in our first video was like what to look for. Like how to tell when the top is in. And what you're really looking for is signs of trend reversal. And one common sign is if you see like it's like a double or a triple bottom. So right here, like this is like a pretty blaring thing on the chart that, just says like, okay, sellers can't push the price down further. Like people think it's cheap at this level. And so like all the sellers who would try to sell during that time, they ran out of HEX to sell. So this like triple bottom, that like double W type of shape, that's like a pretty strong sign of like a trend reversal. And so like just the combination of that like sign of trend reversal plus like a breakthrough to where price had tested this level, like we're like right here where price had kind of held, and then price stayed under there for this whole time, like boom, boom. Then it busted through. Then it tested that from above. Like because price had tested it from below and tested it from above, that's like a strong level. And so a lot of buyers kind of rush in here. And now that like buyers have like, kind of sealed this, there's nothing that happened very recently that's like pushing the price down. And so like, that's probably like, the other primary reason that the price is pumping is that like it's already gone through this entire market cycle over the course of the summer where like price found a bottom, it bust through, and then confirmed right here that price wasn't going to return down to this, to this bottom range, because price like could not get back down there, like at a time when, sellers should be taking profit here because, like it's a point where price had bounced off below. So like, that like price. And I think even we said this in our one of our last videos where like we were like, okay, price is probably going to range between this band and this band, and it looks like that's what it did. And so like just aside from all the fundamentals going on with like the decreasing supply leading up to this like end of the launch phase, just that combined with the chart, like this is a juicy looking chart, and so I think HEX like really is as bullish as ever. Like we'll probably see big retraces. Feel free to buy into a pump. Like with HEX, like the benefit of the staking is that you can make up for buying at a bad price just by staking longer. Like if you bought and then price dumped 20% the next day, you can make up that 20% more HEX you could have had. You can just make that up with a longer stake. And so like, you always want to buy as low as you can. You really want to buy dips, but the trend is your friend. And especially with all the, the excitement and just like, the big supply shock that's going to be happening in the HEX market, where like a massive source of the daily inflation is just going to go away. Like buying into a trend really isn't the worst thing you can do. And all, you can buy into the trend, but, you don't want to be all the way all in ever on anything, because when price goes down, you want to at least have the option to buy a little bit more. And so that's all I have today. I just wanted to, kind of share some of these big forces that are going on in the HEX economy that's, really pushing this price up. A place where you can go to, look at the chart on HEX, and you can link up and actually trade directly right there. It's one of my sites called hex.cash. So just check it out. You can, it just links up with your MetaMask and you just trade right here. So I got to hop off the stream right now. Thanks for joining us. And until next time, we'll see y'all later.